Good evening. This is Mottek on Money, and we're doing it live right here. Mottek on Money 5 nights a week for you, live on the air on 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek on Money podcast, kbc.com, Apple, iTunes, all your favorite podcast platforms. Stocks ending the day lower, another choppy trading day as bank stocks move lower following some more downgrades, and investors await a big speech at the end of this week by the Fed chairman himself, Jerome Powell. The Dow coming in for a closing loss of 175. The S&P 500 dipped 12. The NASDAQ eked out a closing gain of 8 points. S&P today, credit rating downgrades coming after a Fitch ratings analyst reduced his operating environment score for banks to AA minus from AA due to the unknown path of interest rate hikes and regulatory changes facing the sector. According to MarketWatch, Moody's Investor Service just a couple of weeks ago upset investors when it downgraded some lenders and said it was reviewing ratings on bigger banks. The earnings parade continued. A slew of disappointing earnings results from retailers today that have been hit hard by the crime wave out there. Dick's Sporting Goods down 24%. Macy's shares sliding 14%, setting a downbeat tone for the retailers. And that retail ETF XRT dropped nearly 3% on the day. It looks like the S&P 500 is now down about 4% so far this month as bond yields have soared. The yield on the 10-year note hit a 16-year high. Mortgage rates have kissed 20-year highs this week. We'll get an update on that tonight from Jeff Lazerson with a laser focus on mortgage rates and real estate. He'll be joining me live later this hour. He's also Orange County Register real estate columnist. It's a hot labor summer. Still no resolution to the Hollywood strike. The writers and actors still on the picket lines. A big day for UPS, though, and its workers. Results of members voting on the company's new 5-year labor deal with the Teamsters Union are in, and more than 86% of the Teamsters members voted yes. No strike at UPS. And the viral videos of mob smash-and-grab robberies at designer stores in the Los Angeles area, along with outrage from the public, as well as business and civic leaders, including Rick Caruso, led to the formation of a new law enforcement task force in the Los Angeles area focusing on flash mob thefts of retailers. Beverly Hills among the cities participating in that task force. The city has seen a number of smash-and-grab incidents in recent years, but fast police response there leading to the arrest of most of the robbery suspects. I'll be talking about what's happening with Todd Johnson, the president and CEO of the Beverly Hills Chamber of Commerce. He'll be joining us live later this hour. But first, on your money, the markets, and the economy, joining us live now, the one and only John NAJARIAN. Dr. J, as he's known on the major financial networks, co-founder of Market Rebellion. He has the laser eyes on, too, following the cryptos. John NAJARIAN, thank you very much for coming to the line. Give us your view of this latest market action here. We did have a one-day breather on this summer sell-off, but more selling today, and those bond yields still up there. Give us your view of things here at the moment.
Well, you're exactly right, Frank, and you highlighted the two things I think that are the most, the biggest catalysts this week so far. The earnings from Macy's and Dick's Sporting Goods, those are certainly shockers for people that watch and see how the consumer is doing, what's the health of the consumer. In both cases, they actually sold close to the numbers that people were looking for, the people that make those estimates for earnings and so forth, but they did not come anywhere near the margins. And a lot of that was because, quite frankly, a lot of things, just as you said, are walking out of the store. This is a multi-billion-dollar problem in retail right now. I don't blame Mr. Caruso or anybody else for trying to get a better handle on what's going wrong, that people think that this is the proper thing to do, but it's moving up prices for all the rest of us, and yet the profitability is nowhere near what the street expected because of this theft.
Right, and the retailers pretty much in all categories getting hit, not only the high end, but here we are, Macy's, Dick's Sporting Goods, the drugstores, of course. Some have closed here in the Los Angeles area because of crime, and the list goes on. Yeah,
and the same thing with fast casual, if you will. They're having difficulties as well. I mean, Starbucks closed up a number of stores in San Francisco. One of the places where you'd think an espresso or a latte or a cappuccino would be in, high demand, and indeed it is. but they could not keep the stores making the profits necessary for the rents that they were being charged. And I think this is a problem that you'll continue to see. Right now, as far as the return to work, it is still not happening to the extent that it needs to. And so that means the ecosystem for all of the businesses around business, that is, of course, dry cleaners, drugstores, perhaps a lot of lunch places and even dinner spots are really struggling to make ends meet. And even on a reduced schedule, perhaps just going from Sunday to Thursday and not even opening Friday and Saturdays because of some of the issues. This is a real problem. But we've gotten through things like this in the past, so I don't want to be saying the sky is falling, because it isn't. But I do think that this is a challenge, and we'll see which metropolitan areas can meet the challenge and which ones succumb to it.
And by the way, Starbucks has closed a number of locations here in the Los Angeles area, including at some big intersections on Wilshire Boulevard and even at the famous corner of Hollywood and Vine. They had a Starbucks there, but it was closed down in the last year or so because of crime and homelessness in that area. So that is happening here as well. And let me ask you this. What about what's happening with the banks here now? A lot of interesting things happening as these bond yields are pushed up. We've seen the credit ratings go down, according to S&P credit rating, downgrade today for some of the banks. This after Fitch ratings reduced the score for banks recently as well. What is going on with this, and what do we need to know about it?
Well, banks will struggle because both what's on their balance sheets already, Frank, and the loan demand at these much higher rates has just been slipping more and more with each, 10th of a percent or each quarter point that the 10-year moves up. As you said, it hit multi-decade highs, and today I saw it up around 4.36 for the 10-year, and that is what the government can borrow at. That's not, of course, what the rest of us can borrow at. So I think the credit worthiness of a lot of the customers of these banks has likewise gone down. It's very unlikely that you're going to see people getting the same sorts of lines of credit as well as mortgages, and the mortgage applications have just been spiraling lower for the last several months, and that's not a surprise as those rates push up over 7.5% for the 30-year mortgage right now.
MPS, credit card interest rates pretty much at all-time highs here as well, putting additional pressure on consumers. So it certainly is not all rainbows and ice cream cones out there.
No, and I know you love talking about the cryptos and so forth, and This is a real challenge for the cryptos because a lot of the reasons that people like cryptos are, of course, decentralized finance or DeFi. But another reason they like them is they can generate yield with these cryptocurrencies like Bitcoin, for instance. And right now, Frank, when you're looking at getting close to 5%, basically from the government, a sovereign government, that's very challenging for the crypto space. And that's why you've seen, for instance, the BTC price, the Bitcoin price, break 29,000, 28,000, 27,000 down into the 26 and perhaps soon 25,000 range because those are just too daunting, those high rates against the cryptos. People would just say, well, you know what, it's a lot easier for me just to own a bond for a while instead of taking my chances with a crypto.
Have we reached the point now where those interest rates are competing with stocks, especially tech stocks, which are very interest sensitive, as we've seen in the past? Bitcoin, by the way, did crack below 26K a little bit earlier. Right now, it's just above that here. And I know you keep a laser focus on those crypto names. Ethereum, by the way, down to 1,630, and Doja at 6 cents here. Those are some of the ones that we follow on a daily basis. Anything else that's getting your attention in the crypto world, and what do you see ahead in this environment?
Well, it's still a big challenge for the likes of Coinbase, which you might recall was, over 100, 110 just weeks ago, and now it's in the 70s. So that was something that some of us that follow that unusual pattern of put buying or bets that the market will go lower for a particular asset, they were buying a lot of puts back on Coinbase just 2 and 3 weeks ago, and those bets have paid off pretty big. Right now, as far as the rest of the market, I'd say after a horrible week last week, Tesla gathered itself today, and it was probably one of the reasons the NASDAQ eked out a bit of a gain today, despite the Dow losing triple digits and the 12-point drop that you cited on the S&P. For briefly today, Tesla traded up over 239, and that was about $11 or $12 higher than it was just a day ago. So against a sort of iffy tape, that was a pretty strong performance out of Tesla.
Thank you for noting that. And, of course, we're watching what's happening here in Hollywood. Netflix, by the way, I don't know if you saw this story, but this is something I didn't realize this, but apparently Netflix was still sending out DVDs by mail. In fact, they have one final surprise for customers of its 25-year-old DVD by mail business. Ahead of its September 29th shutdown, they get to keep their last shipment of DVDs without any additional charges for unreturned discs. Netflix, of course, has seen a wild ride. Yeah, I didn't know they were still doing it, but of course, that's, I guess, how the whole thing started. And then they went to streaming, of course. And Netflix stock has seen quite a wild ride here and is the focus of attention in this Hollywood strike situation. Looks like Netflix shares did move higher today by $5 at $4.13. What is your view on Netflix here and the other media stocks that have come under pressure in this environment at the moment?
Well, we've been talking to a lot of the analysts that cover the media stocks, in particular the ones that Disney Plus with the streaming there, Paramount, PARA, Warner Brothers, Discovery, WBD, and so forth. I think that universally, no pun intended for my former employer, Universal, but universally I'd say they are looking right now at the possibility that we see some sort of settlement soon after Labor Day. There were hopes that we could see something before Labor Day. Now I'd say it's much more likely that in the week or so following Labor Day, according again to these analysts, we expect to see some sort of movement and then ultimately a deal gets struck.
We'll be watching that closely, of course, and following it with you here as well. And John NAJARIAN, at this point, any specific places where you are putting money now and or taking it off the table?
Well, there was...
You want to buy a car or a house, travel, retire? But it's getting harder to figure out what's the best way to spend and invest. Afford Anything is a podcast that teaches you how to be smart with your money.
Take the amount of money that you would make on that car payment, make that payment to yourself. That way, if you have to make a major repair, it can come out of that. And when you do go to buy your next car, who knows, maybe all 5 years worth of car payments have accumulated over that time. Afford Anything, wherever you listen.
Some real strong activity in Run, R-U-N. This is Sun Run. It's a solar play, and they're everything from the marketing and the installation of solar panels. And right now, they are about half the price that they were last year. I don't mean the panels, I mean the stock. It was $6 billion a year ago. Now it's shrunk to about a $3 billion valuation. There was a lot of speculative paper coming in for September options, betting that that stock goes higher between now and the end of September. So is that because something happens after Jackson Hole? Perhaps. Not a lot of bets on positive things going into Jackson Hole, but perhaps after Jackson Hole, people are getting a little more, maybe not optimistic, but perhaps willing to bet after some of these stocks have seen some pretty significant drops. They're willing to bet that maybe we see some rebounds in Tesla, in Run, and in several others like AMD, we're seeing that paper building, meaning that the people are coming back in and speculating on higher prices by the end of September.
All right. And while we have it in the line, anything new, anything that's catching your attention in the AI world at this point?
Well, let's see. There were a couple stocks that have actually truly performed with AI helping them. And I got to believe that what we've seen from, for instance, Charles Schwab laying off a whole bunch of people, not right now, but over the next month or two, a lot of that, I believe, SCHW, will be because of jobs that AI can do instead of human beings. And that is one of the reasons that people were kind of focused on that stock today, both because of the money they make on the balances in their people's accounts, the money that is just free sitting there in their account. Schwab, like most brokers, pays very little, but they have margin loans that they can do without all the paperwork of a mortgage. So I think that's one of the reasons people are looking at stocks like Schwab and betting that perhaps they do better than banks in the short term.
Very interesting. One thing that caught my attention in the last couple of days, according to a federal court in Washington, D.C., a work of art created by artificial intelligence without any human input cannot be copyrighted under U.S. law. I thought that was very interesting and certainly could have a ripple effect, certainly in the legal world.
You bet. In other words, the other AIs could just copy that. And next thing you know, nobody really gets the credit except perhaps that you created it. But again, if you're not going to be taken up on charges for copying it, if something was popular, why wouldn't you copy it?
Very interesting. Well, John, thank you very much for hitting on everything here tonight. As always, we do appreciate it and hope to see you out this way. Have you been to Vegas yet? Did you have that conference?
That's going to be coming up the 21st through the 24th in Vegas, the Market Minds Summit. That should be a fun time, and I'm still trying to get you on the docket for that.
That's great, John. Well, hopefully we'll be in touch and maybe get to see you out there as well. So thank you very much for taking the call here tonight. Have a great rest of your evening, and look forward to speaking with you again very, very soon.
Thank you, Frank. You too.
Thanks again very, very much. That is John NAJARIAN, Dr. J, as he's known, on the major financial networks, co-founder of Market Rebellion, live with us here tonight on Mottek on Money on 790 KABC. Mottek on Money continues here on 790 KABC. Good evening. Mixed finished for stocks today, with retailers coming under pressure in a big way. Dick's Sporting Goods stock down 24%. After that, retailers' second quarter profit missed analysts' expectations. Sales also fell short. That company's been hit by retail theft. Macy's, too, down 14%. After that, department store retailer reported a loss in the latest quarter while posting a decline in sales. Taking a look at the Dow, down 175 at the bell today to 34,289. The S&P 500 down 12 at 4,388. And the NASDAQ managed a closing gain of 8 points at 13,506. The yield in the 10-year note, impacting those fixed-rate mortgage rates out there, is at 4.33% today. It's been hitting, about a 16-year high recently, and mortgage rates have moved to a 20-year high this past week. I'll talk about that. I'll talk about Jeff Lazerson, the president of MortgageGrader.com, and Orange County Register columnist, coming up here in the next half hour. We'll also be talking about that retail crime task force that was recently formed here in the Los Angeles area. It includes the Beverly Hills Police Department. I'll talk about it. I'll talk about it with Todd Johnson, the president and CEO of the Beverly Hills Chamber of Commerce. Checking the cryptos now, we see a Bitcoin hovering at around 26,000, Ethereum down 50 cents at 1,630, and Doge at 6 cents. The price of oil still hovering at around $80, $81 a barrel, and gas prices continue to tick higher here in the Los Angeles area. Inflation still on full display at those gas price signs. It definitely pays to look at those signs if you can before you pull in, because the prices vary big time. Right now, regular gas in Los Angeles averaging $4.36 a gallon. According to today's AAA Fuel Gauge survey, premium is at $5.69 a gallon on average, and diesel all the way up there now at $5.81 a gallon on average. Mottek on Money continues here in 790 KABC. New readings on real estate out today. Existing home sales numbers came out. According to the National Association of Realtors, sales of previously owned homes down by 2.2%. in July, a 6-month low amid higher mortgage rates and a continued shortage of homes for sale. Of course, availability and affordability, huge issues here in the Los Angeles area. Mortgage rates, meanwhile, have hit 20-year highs recently as bond yields have ticked higher. Let's talk about all this now with Jeff LAZERSON, the president of MortgageGrader.com, also Orange County Register real estate columnist. Laser focused now on what's happening out there. Jeff, thank you very much for coming to the line. First, how are those mortgage rates looking today?
Looking high. The 30-year fixed is at 6.99% at one point locally. The 15-year fixed is at 6 7/8% at one point, and that's up to $726,200. High balance, so that goes to $726,201 to $1,089,300 in LA and Orange County only. High balance is 7.25% at a point. The 15-year high balance is at 7% at one point. Jumbos are about 7 3/8% at one point, so that's anything over $1,089,300 in LA and Orange County, and then in the Inland Empire, it's anything over $726,200. Something that caught my eye today is for the first time in years and years, I saw the Fannie Mae coupon up at 8%. So that means rates keep pushing up so much that Fannie has to develop a new coupon at a higher rate. So the 8% are on their way, Frank.
All right, so you see higher rates ahead here?
I do. I think in the next, near future, we're going to see another one or two bad inflation reports between wages still going up and energy prices, groceries are up, and of course, real estate is expensive. And that leads to inflation. So we'll see a couple of bad inflation reports, or at least one really bad one. It'll drive the Fed to raise rates some more, and the mortgage rates are going to follow. So we're probably going to be at about 7.5% here on a 30-year fixed in I bet you by the beginning of the fourth quarter.
All right, we will be hearing from the Fed chairman on Friday. The Fed chairman Jerome Powell is scheduled to deliver a speech at the annual Monetary Policy Symposium in Jackson Hole, Wyoming. So maybe we'll get some clues there as to what he's thinking and what the Fed policymakers are thinking as far as whether they're going to pause again or keep raising rates. So a lot of people, certainly in your business, will be tuned into that. So what's your advice for anyone who can't afford it at this point, Jeff? Are they going for the fixed or adjustable, or what product is in fashion at the moment?
Well, Frank, such a great question. What do you tell people? And I got to tell you, for the first time I don't even know that I've ever had this thought before, but I've just sort of come to this conclusion. Unless you have money, real money that can afford something in Southern California, or you have family money or an inheritance coming or something like that, you might really just be better off not buying here or buying somewhere else in the country, because this is not a place for affordable housing. And as much as we want to talk about it, if you have starter homes that are $700,000, $800,000, $900,000, $1 million, that is just tough. And in fact, this week the column I'm writing is about zero down and low down payments and things to help first-time buyers. And certainly I found some really cool programs that I'm going to write about. But, there's always these tricks to it where you have to have an income. Your income can't be more than X. So there's always some hitch to it that really drives you down to a $350,000 or $400,000 sales price. And I found a property out in Banning, for example, that somebody could afford on this really good program. Well, if you're living in Banning, then that's great. But if you're not in Banning and you're in, LA or Orange County, it's not happening. So it's tough right now.
Tough commute between West LA and Banning, that's for sure.
Yeah, and so I just feel very badly for people that don't already own homes and have not been able to ride this appreciation wave up, and so for so many of the first-time buyers, I think the best thing that they can do is either go buy in the outskirts in Southern California, where it is a lot more affordable, and figure out if you can work from there, and or maybe you can telecommute, something like that, or talk to your relatives, or maybe squabble money together with a couple of friends or family, and you go in on something together, and you just house share until your property value goes up. I mean, those are the kinds of things that I'm telling people to do now, because it's just so sad watching them pay all this money in rent, and they want to buy, and the rental payments aren't that much different than house payments, and they're just both really high, and it's just not an ideal place to live if you're not making a pile of money.
Well, I appreciate you telling it like it is, as you always have in these conversations. On the air live with Jeff Lazerson, the president of MortgageGrader.com, and also Orange County Register real estate columnist. And as far as home prices are concerned, here now, Jeff, where do you see the home prices go from here in the Los Angeles area?
Well, I think in the near term they're still going up. I've talked to a few of my realtors in the last week, and they are still getting these ridiculous offers on tired properties, and clearly overpriced properties, and people are still buying them. And the reason that they're buying them is because they're either paying all cash, or they're putting a very substantial down payment down, so that even if the appraisal comes in low, it doesn't really matter, because they have enough money in the deal to offset it if they need an appraisal at all. So I am not seeing any let up in the prices, because there's this desperation in the air. People that think they need to buy or want to buy, or there's people that just have this extra dough it just burns a hole in their pocket, and they just happen to be wealthy, and they're just buying stuff. And at least right now, even though I heard you earlier on your show that nationally prices have gone down a few little ticks according to NAR, but I don't see it here in Southern California. I see it continue to go up. And now, when rates hit 7.5% or close to 8%, then I think we might start seeing a hard stop. But so far, it's not there.
All right, and then there's commercial real estate, and certainly we are seeing some big price declines there, right, Jeff? What are you picking up here on the commercial side?
Yeah, commercial side is it's a nightmare right now for a lot of commercial stuff. Not all commercial stuff. I think warehouse stuff is still okay. Office is terrible. I think apartment financing is struggling, just because how you have to qualify for the loan and the amount of down payment and stuff. So, so if you're a buyer and you want to buy a small apartment building or a strip center or something, there's a nice article in the Wall Street Journal today about how small retail is really coming back, because not a lot has been built, and like the suburbanites, they called it in the piece today, are sort of working from home and wanting to go to the local shopping center to get a meal or something. That seems to be coming back according to that article. But other than that, I don't know. So if you're a buyer of commercial property, and you might be able to get a good deal on somebody that's desperate to sell because they have a balloon payment coming due on that commercial mortgage. They don't work the same way as residential loans do. Residential, they amortize over 30 years. Most commercial loans have a 25 or 30-year amortization, but they'll have a balloon payment due in 5 or 7 or 10 years. And a lot of these people are going to be stuck. They cannot refinance the property. So it's an opportunity, great opportunity to buy commercial stuff. You just make sure you get enough of a discount, because we don't know where the bottom is.
All right, and then there's nervousness also in the banking sector with these various downgrades. So a lot to talk about here coming up, Jeff. So wish we had more time, but we'll have to stop there. Jeff Lazerson, the president of MortgageGrader.com, and Orange County Register real estate columnist. We're looking for that column you mentioned this weekend, Jeff. Thank you very much for coming to the line here tonight.
Thanks, Frank. Always a pleasure.
Likewise. Thank you very, very much. Looking for legal help you can trust? Look no further than attorney Clark Fielding and the Fielding Law Team, your go-to destination for top-notch personal injury legal representation. Fielding Law understands that life can take unexpected turns, and you need strong legal help to stand by your side. If you've been injured in an accident that was not your fault and need help with a personal injury claim to obtain justice, Fielding Law is here to fight for you. Accidents happen, but you don't have to face the aftermath alone. Fielding's Law experienced attorneys are here to guide you through the legal process and ensure you get the compensation you deserve. Medical bills piling up, lost wages due to injury? Don't worry. Fielding Law specializes in personal injury cases and works tirelessly to recover your losses so you can focus on healing. The Fielding Law Team has a proven record of success. They've helped countless clients secure fair settlements and win in court. You can trust Fielding Law to provide you with the best legal representation possible. If Fielding Law takes your case, Clark and his team of sharks will personally work with you, fighting hard for you to receive all the compensation the law allows. Call Fielding Law for a free case evaluation. It costs you nothing to get that honest opinion. Do what I did. Put Clark Fielding's number in your phone under the word accident. That number is 833-88-SHARK, 833-88-SHARK, or go to clarkthesharklaw.com. Mottek on Money continues here in 790 KBC. The viral videos of mob smash and grab robberies at designer stores in the Los Angeles area, along with outrage from the public and business and civic leaders, including Rick Caruso, leading the formation of a new law enforcement task force in the Los Angeles area recently, focusing on those flash mob thefts of retailers. Beverly Hills among the cities participating in the task force. The city's seen a number of smash and grab incidents in recent years, but fast police response there has led to the arrest of most of the robbery suspects. Let's talk about what's going on now with Todd Johnson, the president and CEO of the Beverly Hills Chamber of Commerce. Todd Johnson, thank you very much for coming to the line with us live here tonight on Mottek on Money on 790 KBC.
Well, it's always an honor to be with you, and I appreciate you taking the time to talk to us.
Thank you very much, Todd. It's wonderful to see Chamber of Commerce weather return to Beverly Hills following that storm over the weekend. So that's the good news. And give us an update on what's happening there in Beverly Hills.
Yeah, so as you had mentioned about this coalition that's been formed between Burbank and Glendale and L.A., Beverly Hills and Santa Monica, and also the CHP and the U.S. Marshals. So we've got some pretty powerful organizations pulled together to help fight this crime. I applaud Mayor Bass for starting this because it was going to take someone like the city of Los Angeles to bring this together. Beverly Hills, as you know, being a resident, has and our council are outstanding when it comes to their commitment to safety in Beverly Hills. When you think of Beverly Hills, you think of luxury. You think of all these, really nice retail stores that we're blessed with, and many, many people from all over the world come to our city, and they want to know it's safe. And we are one of the safest cities there is, hands down. We have more cameras per square mile than any city in the world. We're over 2,300 cameras right now. We have license plate readers just about all the entrances into the city. So if a car has been participating in some type of, criminal activity, it comes up immediately, and they usually have them pulled over within minutes. Our message has been loud and clear since COVID, and even prior to COVID, that we want people to come to our city. We want people to come shop, and our incredible restaurants, our hotels. It is the luxury capital, but if you come with the intention of doing crime, you will be caught.
On there live with Todd Johnson, the president and CEO of the Beverly Hills Chamber of Commerce, and certainly the slogan there is police and community together, and that includes the business community certainly. And at one of the chamber events recently, we did see the police chief Mark Stainbrook there, and he was talking about a 2-minute response time there for the police when they're called, right?
Yeah, we're as I'd mentioned, 2,300 cameras, and we have a drone that's flying 7 days a week, 10 hours a day, soon to be 24 hours a day. Of those 2,300 cameras, those are all monitored 24 hours a day, 7 days a week by people. So people are being watched. They are seen. Some people see it as kind of a big brother, but most people see it as a very reassuring that we can come to Beverly Hills and know it's going to be safe. Some people purchase some very large items there, and between the security that stores have themselves and also our added security, not just our police, but our two agencies have been working with us now over 3 years. That's additional eyes and feet on the ground in our city, and there's a heavy presence. And like I said, you'd be very foolish to try to pull anything off in Beverly Hills. Even if they don't get you right away, they go to the ends of the earth to bring people to justice.
And certainly we've seen new places open recently, right, Todd? Give us an update on for the business community and for all the great visitors there. What can they expect these days?
Yeah, we've been so fortunate to have a number of businesses. There's virtually no vacancy on Rodeo Drive. And even throughout the city, the vacancy rate is fairly low compared to certainly what other cities are dealing with. We've had some incredible restaurants open. We have Dante, which is a Michelin star restaurant out of New York. They're in the Mayborn Hotel. We have Maria, which is opening later this year toward February. We also have Daniel Boulou, a very famous Michelin star restaurant in New York that's opening on Wilshire. We're blessed. We have incredible eateries in our city, and just about any kind of food you want is available. And we're very fortunate to have many of these people that are in our city.
All right, and it looks like international tourism has picked up again, even Chinese tourists, right, returning, and how's it looking from that standpoint?
Yeah, we certainly, we took a hiccup with not a hiccup, we took a big hit as the whole world did with COVID, but I think we've recovered probably quicker than some. We've got a lot of, as you mentioned, some Asian, but a lot of Europeans are back. And I hear when I'm out on the street talking and walking with people, many people from Italy and England, and just there's a lot of people that are finally out and about wanting to come to our city, and we're very fortunate for that. And the tour buses are full. The parks are very busy with people taking photos. We're very blessed.
Certainly, and safety and security is a big part of that, certainly,
yes.
Todd. Well, thank you very, very much for that important update tonight, and look forward to staying in contact with you on all the great things happening there. Todd Johnson, the president and CEO of the Beverly Hills Chamber of Commerce, thank you very much for taking the call live with us here this evening.
Thank you again, and thank you to all your listeners.
Thanks very much. Todd Johnson, live with us here tonight on Mottek on Money. We'll be back again tomorrow evening in the 5 o'clock hour. You can also bring up the Mottek on Money podcast on demand at KBC.com, Apple, iTunes, and all your favorite podcast platforms. This is Mottek on Money on 790 KBC.